I'm using the biggest company on the planet to create income for myself 3 times a week. Forget about creating weekly income selling options. How about getting a paycheck every Monday, Wednesday, and Friday, 3 times a week? In this video, I'm going to show you exactly how to do that step by step. We're going to walk through my platform and stick around until the end because I'm also going to share with you what you do when the stock drops. I'm Michelle. This is the Cressivo channel. Thanks for watching. Now, before we jump right into it, be sure to subscribe to the channel because I'm putting up videos like this all the time and you don't want to miss out. Now let's jump right in. Now the stock I'm going to show you is Nvidia. And Nvidia became the first $5 trillion company, the biggest stock traded in the world. Quick fun fact, did you know that 3/4 of Nvidia employees are actually millionaires? True stuff. Now first we're just going to check out what Nvidia's been doing all year. It's kind of like a roller coaster if we look at the chart. But the great thing about selling options is that we can capitalize on all those moving ticks, selling puts and selling covered calls, creating income for ourselves regardless of whether the stock goes up, down, or stays sideways. Let me show you what I mean. Now the stock right now is trading around $224 per share. And our first step is to sell a put. What that means is that we're promising to buy the stock, but only if it drops below a certain price. And guess what? We get to choose that price. Now, the closer that price is to where the stock is trading, the more money we make. So we have to balance our rate of return against being required to buy the shares. Now, I'm going to use this app to help us find the trade. I'm first going to type in the stock symbol, NVDA, and I'm going to fetch the data. Now, our first step when we sell a put is that we choose the expiration date. And like I mentioned before, Nvidia is one of the unique stocks that have expiration dates 3 times a week, every Monday, every Wednesday, and every Friday, giving traders more opportunity to flip their money over and over again. So I'm recording this video on Saturday, and we're going to look at a Wednesday expiration date first. That's August 12th. So we're going to choose the expiration date here, and then after that, we choose the strike price. The strike price is the price that we're comfortable buying the shares if the price dropped below that level. Now, when we click this box here, the easiest way to understand this is to choose the strike price based on what's called delta. Delta is the statistical likelihood that the stock is going to go that low. Now, again, the closer we choose to where the stock is trading, the more money we make. And we can see that here. For example, right now the stock is trading at $223.80, as we can see here. Well, if we choose a 220 strike price, right now it's paying about $168. By the way, that means $168 gets dropped into our brokerage account right when we make the trade. If we go a bit further away, let's say $215, it's only paying $64. Now let's evaluate that particular trade as a starting point. I'm going to click the button here, and the app does all the work for us. It shows us that this contract last traded at 0.66. Meaning $66 would get dropped into our account right when we make the trade. Now, to make this trade, we would have to put up $21,500 because we're committing to buy 100 shares if it drops below $215 per share. That's the strike price. Now, we don't have to do the math. The app does it for us. And it shows us that our annualized rate of return on a trade like this is a little bit over 28%. Now let's compare that to a contract expiring Friday instead of Wednesday, and that would give us a couple of more days. Now when we extend the expiration date out a little bit further, we get paid more money. Let me show you what I mean. We're going to look at an August 14th contract, and we're going to look at a similar delta. That would be the $212.50 strike price. It has a delta of about 13, meaning it has an approximate 13% likelihood the stock is going to drop from where it's trading now below $212.50 before it expires next Friday. Now we can see that this contract last traded at 0.73, meaning $73 gets dropped into our account, so a little bit more money. Our annualized rate of return is just shy of 21% because we're holding it a little bit longer. You see, the longer we go out, the more premium it pays. So let's go out a little bit further. Let's say about a month away. I'm going to go to September 11th, and I'm going to choose a similar delta, around 13. That's a strike price of $195. Now we can see this contract is trading at $197. So it's a bit more money, but because we're holding it for quite a bit longer, our rate of return is actually a little bit lower. So this is a perfect example of why you don't want to just look at the raw premium that you're paid. You want to actually focus on the annualized rate of return to know if it's a good trade or not. Now, as we can see in the expiration date picker, it trades 3 times a week. So there are lots of opportunities that we can create income for ourselves on an ongoing basis. Of course, this is just an example, and you have to make sure that this particular stock fits in your portfolio. Now, I promise to help you understand what you do if the stock drops, because that's what happens. Stocks go up and they go down, and we don't really know where they're going to go and when. But here's the great thing about selling options for income. If the stock drops below your strike price when you sell a put and you have to buy the shares, you just turn right around and sell a covered call. I'm going to walk through an example with you right now, click by click. I'm going to hop over to the covered call section, and I'm going to type the ticker in here and fetch the data. So let's get an idea of how much money we can make selling a covered call, because once we own the shares, we can sell a covered call promising to sell our shares higher than when we purchased them. That brings us in income again. Now let's say we own 100 shares and we want to sell a covered call with a strike price just over what we paid for the shares. And we also choose the expiration date, just like we did when we sell a put. Let's also choose again next Friday. But remember, we can choose Monday, Wednesday, or Friday. So there's a lot of flexibility. Now we can see here that an at-the-money call, a call that's trading a little bit higher than where the stock is currently trading, is going for about $355. And if we look at our annualized rate of return, it's significantly higher than selling a put, giving us the opportunity to really get paid extra while we're having to hold the shares. Now here's what happens when we sell a covered call. When the contract expires, in this example on August 14th, if the stock is higher than the strike price, in this example, $225, we automatically sell our shares. So that's a good thing. We paid a little bit less and we make a little bit of a capital gain. But the most important thing is that we always keep the premium that we earn when we sell the call, no matter what happens, whether the stock goes up or whether it goes down. So for example, let's say the stock goes lower, and let's just say as an example, the stock finishes at $210 when the contract expires on August 14th. Well then, in that case, we keep our shares and we also keep the $355 in premium. And the icing on the cake, we get to sell another call again straight afterward. So you see, you can keep making income on shares that you have over and over and over again until you end up selling them. So what'd you guys think of that video, huh? How does that sound? Creating yourself income 3 times a week. Life-changing stuff, people. If you want to practice this without using your own money at risk, I'm launching the Cressivo Cup, which is starting September 1st. It's a paper trading competition where you can use strategies just like this one and not risk your own money. You have to check it out. Details in the description below. Thanks for watching. If you liked the video, be sure to smash the like button. Make sure you're subscribed to the channel so you don't miss any more videos just like this one. And if you're looking for one-on-one support, check out my mentorship program. It's helped a lot of people really take their trading to the next level. Happy trading!